July 5th, 2023. This is the S&P 500 E-Futures Mini on the 2000 tick chart for the NinjaTrader 8 platform. You can go down to the descriptions below. You can see where I thought I saw setups as well as where I took my trades. I only took one trade today, and it was a green trade. There weren't too many setups that I could find. There were some that were looking pretty choppy, but they didn't feel like they were high probability, so I didn't mark up too many things on the chart today. So there's only one piece of economic data that came out that might have moved the market, which was at 11 o'clock Pacific Standard Time. The FOMC meeting minutes from last month's meeting was released, but right around here, which is 11 o'clock, it didn't really cause too much of a market reaction, which I think it's because most people already knew what the meeting minutes were. I mean, after each meeting, Powell comes out and he gives a press conference. So meeting minutes just add a little bit more color in case someone didn't ask a question. However, everybody wasn't too surprised with what was contained in the meeting minutes themselves. So I'm going to go into the trades right now. It shouldn't take too long. There weren't too many setups that I found. In the pre-market, it looked like things were just kind of selling off. There was 2 clean legs down, but I didn't trade the pre-market. Also, I wasn't sure if this was a true trading range, so I drew the highs and the lows of the pre-market. And once the market opened, prices just kind of bought up, topped around, and the first setup I saw was right here. It actually made a new high. Right here, all along, the EMA has been holding. I saw a new high. The first entry long, second entry long. Now, this second entry long is a bounce off the EMA. This isn't a very good, clean signal bar. But it was nice that when this candle bounced off the EMA, I actually waited for it to break to go above the previous high to confirm the second entry long before I entered my trade, and I waited for it to come back and pick me up. I also saw a second entry short failure. So if this is a new low, the first entry short right here, actually right here, the second entry short, and right when this candle broke above the previous, not only did it complete the second entry long, it also completed the failure of the second entry short. So I thought it was a worthwhile trade to take. I will admit it might have been a little more riskier because you are kind of buying into the highs, but I noticed that previously the EMA was holding and there was this big leg up consolidation. So I suspected there might be another leg up. So that's where I entered the trade. I was able to get my quick scalp. And right before then, the market sold off just slightly, but it stayed within the trading range. It was good enough for a quick scalp. Prices continue moving. Creates another consolidation area here. At this point, I wasn't sure if this was like a spike and kind of a slow moving channel, or it was just kind of 2 legs, first big one, and then kind of a consolidation. If you were calling this a trading range, there was kind of a bullish bias as it was making higher highs and higher lows. But I didn't trust this channel completely yet because it did confirm nicely at the top. So anytime prices got up here, you know there might be a bounce. However, due to the character of the market, everything is bullish. So to go short would be counter trend and a little more riskier. I found the support down here, but I didn't fully trust it yet because here you only have 1, 2 confirmations. And at one time, I did have it drawn slightly higher here, but then you have an overshoot here and a second overshoot there. So I eventually kind of dragged it down here, and I got 2-point confirmations at this point in time of the day. Prices continue moving, goes up. I do see a second entry short here that fails because there's a new low here. I thought it was a possible trade because this is the new low. It makes a first entry short, makes a second entry short, and it fails. So this is what you see in real time. Right here, when this fails, the problem with this setup, even though I thought it was potentially a possible trade, is it's bouncing off the bottom of this ascending trend channel, which is good. Gives you 1 key entry point. It closed above the EMA, which is also nice, but it didn't really fully form this setup above the EMA. So in other words, it spent most of its time below, and at the last moment, it broke up and over. So when you see this candle form, unless you took it on the engulfing bar right here, you'd watch this fill, and your only option would be to place it where the original signal bar was here, and maybe not after the close of this signal bar because you're already buying into the highs. And if this is a true trading range, you might be afraid that it might bounce back down. But it turns out if you did put 1 tick above the original signal bar, this candle would not have filled you. It would have left you by yourself. However, when this one closed, I would have canceled the order immediately because one thing, the scalp pretty much has already been made. The second thing is this one's kind of looking like it's struggling. It might come back down. It does kind of come back down. And if it didn't stop you out then this candle likely would have stopped you out. And if you kept your stop way down here, you're risking a pretty big amount of risk for the amount of reward. You would have survived here. And if you didn't get out here, it's kind of treating you and telling you there's a triple top. You for sure would have gotten stopped out here. But I stayed out of this setup completely because I just didn't like the way it looked. Prices continue selling off. It kind of enters the second channel going down. And if you look at pretty much the volume of the day, this was kind of a slow moving day. And this is the first day after a holiday weekend. So most traders, probably a lot of them, took the day off, maybe even the entire week off. So the first day coming back from a long weekend, you can expect that volatility is low, and that's what we saw today. Prices continue chopping. I thought I had a trading range, so I actually had this actually higher up here at one time. And then when it broke out, I thought it might be a failed breakout. So let's just go ahead and drag this over. I do see a second entry long here. There's a new high here. This is obviously a resistance up here because prices are having trouble breaking through. You have a first entry long here. You have a second entry long potentially setting up here. Now, the second entry long, if this is actually a pretty strong signal bar. So when this one candle formed, if you were ready, you could have jumped on it. But I think the way I remember seeing this is that kind of flashed up, and if you didn't jump on it right away, it would have left you behind. However, the problem with jumping on right away, it made a micro double bottom here. So it made a first entry long right here. It made a second entry long. You'd have to have confidence that this setup is actually going to rocket up. But the setup here is, for one, kind of in the middle of nowhere. Also, the EMA is trending downwards. So pretty much the character of the trade is showing that it's bearish. So you do have enough room to go up to the EMA. But I thought it would have been a little bit more riskier move to make. But it turns out it would have worked out, at least for a quick scalp. But of course, you don't know that at the time. The prices continue chopping around. I wasn't sure if this trading range would actually be extended. So I actually dragged it down to here now. And then later I dragged it down to here. And as you can see, it does make a first entry long. And that's pretty much all you get. Makes another pretty much consolidation up here. It's having trouble fighting this resistance. So when you see this, you do see a first entry short. It flashes up. It makes a second entry short. However, this signal bar is very, very strong to go short on. So being such a bullish bar, trying to short it, that meant pretty much the market had to take back the entire move, which it did, and it broke lower. It felt like it was kind of a trap because this is a bad signal bar. The trigger bar, as I said, completely engulfed the previous signal bar, and the setup is above the EMA. So to go short above the EMA, you have two things working against you. One is this EMA is coming into play potentially. This could be a failed breakout, but this looks like a huge move that came down. It didn't close at the very bottom. If it did, it gives it another, I guess, point that it might be strong enough to continue downward, but it kind of pulled back at the last minute. So this felt like a trap. And I thought, well, if it's trap, I'm just going to sit out. Maybe there's going to be a lower high confirmation. You get your lower high confirmation here, but I still didn't think it was a good setup to take because it confirms a second entry short, and it is a lower high, but it is above the EMA. So it's kind of, if it was formed below the EMA, it gives you a little more confidence and it would be moving back into this trading range. However, it closed above and outside. So you're still unsure which way it's going to go. And by the time you react, this big, big, big red candle forms. So you kind of missed out on this trade because if you wanted to take an entry after you saw this lower high, during the life of this candle, when it flashed down, I thought a safe entry, if I wanted to take the trade, would have been actually one tick below this big signal bar right here. However, as I recall, this one just kind of flashed, and then once it broke below the EMA, it had a lot of trouble coming back up. So this trade pretty much went without you, unless you just took a big risk and jumped on it and in anticipation of this big move. But you clearly don't really know that's going to happen because this could be a breakout pullback, and it could have just continued back upwards. Certainly, if you did put your trade one tick below, you wouldn't have gotten filled because it already rocketed back up. But during the life of this trade, even if you put it one tick below this candle, it is risky because as you can see here, it would have came back, likely stopped you out, and then chopped around. So for sure, this is a little bit more riskier. And The volatility, if you look at from this time all the way over to here, this is a span of 1 hour. And as you can clearly tell, there aren't that many 2000 ticks. This is actually 1 whole hour of price action. And you can see there's not that many candles. So you'd have to wait a while and sit through some nervous trade to see if your trade actually played out. And that's not something I wanted to do, especially at this time of day. Price to continue moving down. It breaks out of this trading range. So at this trading range, I wasn't sure if it's failed breakout, comes back in, but it turned out to look like a failed breakout pullback. Continues up. I do see this as a second entry short because actually from down here is the new low. You don't get a first entry short till here. Breaks above the EMA, continues moving, falls nicely within this channel, and you get your second entry short right here. I thought this potentially was a second entry short and a failed breakout. I thought that was a possible trade because there is a pretty decent signal bar. There is enough room to the EMA. And it looked like this resistance is holding because it's pulling things back in again. So I didn't take the trade, but if I did, I would have put it 1 tick below this signal bar here, this little kind of an inverted cross. And I would have gotten filled on this candle and likely have gotten stopped out on this candle. So even though this trade at the time I thought might have been decent, it would have been a losing trade. However, in hindsight, reviewing this a little bit more closely, I do notice that if this was the ascending channel going up, this is the first break, so you could expect it to make a new high, which it does. So taking an entry here, there'd be two conflicting things going against you. One, it is a little bit of a counter trend, even though you could be in a range. You could be in a range, but the range really hasn't been defined at the top side. The second thing going against you is this candle, these signal bars aren't very good, and it isn't a clean break of this ascending channel yet. So now, after it broke and made a new high, you could probably start looking for shorts here if there was a good setup. But as you can see, you do get, if you took this a new low, first entry short, this is a second entry short, but it doesn't feel safe. As you see, this congestion is building up. So now it definitely doesn't feel safe. If you didn't take an entry yet, I would just wait to see if prices decide to go down or up. As you can see, it breaks up and then it comes back down. EMA is still holding. First entry long, second entry long, but this is a terrible signal bar. Prices can kind of start trending down into this trading range, but it's not very clean. And then just like that, it kind of ends at the close of the day. And all these candles and also all the price action today was a little bit slow. So even though it's a full trading day, you can tell just by how many candles set up, it clearly is not that much volume today. So the only trade that I took, which is kind of early on, right around the 7 o'clock Pacific Standard Time, was a green trade. But everything else, I didn't see any clean, obvious, or safe entries. So hopefully that was helpful.